Hi traders, welcome back to Options Drive. April 2025, one word, brutal. And I want to be brutally honest with you. This wasn't about taking wild trades or betting big. I stayed mechanical, I managed my delta, I rolled early, but I made one bad decision. I closed my Black Swan hedge. Yeah, that Black Swan hedge, from my trading plan, that famous Black Swan hedge. I closed it just a few days too early. That one move, and probably only that, turned a possibly flat month into a huge drawdown. So let me show you exactly what happened, what I did right, and what I learned the hard way. Alright, early April, the market was already on edge. We had seen a few red weeks and volatility was climbing. VIX was around the high 20s. And then on April 2nd, Trump steps up and announces a 10% tariff on all imports and 34% on Chinese goods, just like that. He calls it Liberation Day. 2 days later, China hits back with 34% tariffs on US goods plus some export restrictions. And the market completely falls apart over the course of just a few days. S&P dropped to almost 20% from all-time high. And let me say that again, almost 1/5 of the market wiped out in just several days. That's a full-on event. And VIX spiked to 60, the highest level since COVID-19. So it wasn't about strategy anymore. It was all about survival. Now, I wasn't doing anything crazy, just standard short premium setups you probably know from my trade ideas I share on the regular basis. Some puts in ETFs, some spreads, some 4 for 1s, and many other ratio spreads. But Greeks were fine. I managed early. I wasn't too directional. Honestly, I played it quite right, except for one thing. I had a hedge, a famous Black Swan trade. It sat there for weeks doing what hedges do, so nothing. And in late March, I got clever. I said VIX is calming down, realized volatility is low, I don't need this. So I took it off. And several days later, the market explodes. That hedge, what is funny, it would have completely offset my drawdown and even more. It can be very profitable. If I would done nothing, literally just left it on, I would have finished the month flat or even with a small profit. But instead, I tried to optimize. I tried to outsmart the market. That's where I screw up. So my portfolio ended April with huge drawdown. Um, it's not the end of the world, but still probably the worst month I have had in uh, in my options portfolio ever. And again, not because of bad trades, not because I was greedy, just because I cut the parachute right before the crash. That hedge was doing its job, I just didn't let it. So here's the takeaway. As traders, we love to optimize. We like to feel in control, but sometimes the smartest move is to do nothing. Let the burning stuff do its job. So yeah, April sucked, but it was a great reminder. Following your trading plan is one thing, but don't try to outsmart your own system, especially when the risk is real, like we have. So now I'm trying to recover from that crash. Of course, portfolio is down for the year. It was 77% up. Now it's flat or a little bit down for the year, and we continue just focus on new trades. And I think as weeks will normalize, um, we should recover very quickly. But let me know in the comments, did you keep your hedge in April or did you yank it too soon like I did? Of course, hit subscribe button if you want more honest breakdowns like this. No hype, just real trades and real lessons learned. And see you in the next one.